May 27 looked calm on the surface, but the market's plumbing shifted underneath. The Dow, S&P 500, and NASDAQ all set records. Oil fell, yields eased, and the tape held together. The bigger question is who gets automatic buying next. Index providers are building a fast lane for massive IPOs, and SpaceX is the obvious test case.
The closing numbers were steady. The S&P 500 rose less than 0.1% to 7,520.36. The Dow added 182 points to 50,644.28. The Nasdaq gained 18 points to 26,674.73. All three finished at records, but this was not a frantic chase. It was a market drifting higher while a structural change moved closer.
FTSE Russell opened a new path. Its Russell US indexes now have fast entry for very large IPOs. If a new listing meets the size and eligibility tests, it can be added after the 5th trading day, using its day 1 free float. A huge IPO no longer has to wait for the old quarterly calendar to matter. NASDAQ has its own shortcut too. The NASDAQ 100 rules now allow the largest new listings to enter much faster than before. A company big enough to rank with the top names can be reviewed after trading begins and normally added after the 15th trading day, with notice. The index is adapting to companies that arrive public already huge.
Index funds cannot ignore this. If a company enters a benchmark, funds tracking that benchmark need exposure. They may have to buy the new entrant and trim existing holdings. That is why the rule change matters. When the company is large enough, index mechanics can move real money.
SpaceX turns the theory into a real test. Its prospectus is public, and it is expected to trade on NASDAQ under the ticker SPCX. The filing showed 2025 revenue of about $18.7 billion and a net loss of about $4.9 billion. Starlink is the profit driver. The valuation debate is huge, but the index question is simpler. What happens if a trillion-dollar scale company arrives this fast? There is a break in the system. NASDAQ caps low float index weight at 3 times free float. FTSE Russell also bases fast entry math on the float available at listing. That does not stop forced buying, but it does stop the rulebook from treating every locked-up share as tradable. The pressure is smaller than full market cap, but it is still real. The uncomfortable part is what this means for the old winners. Index demand is not infinite. If a massive new name gets added, other weights have to make room. Apple, Microsoft, Nvidia, and Meta are not suddenly broken. They may just have to share the benchmark with a new giant before the market has fully settled the fundamentals. The software tape showed the same selectivity. Zscaler reported strong current growth, but investors focused on the forward setup and weaker free cash flow margin guidance. That is the punishment side of this market. Buyers still pay for growth, but they are less patient when next year looks slower. Snowflake showed the other side. It raised its full-year product revenue outlook and announced a $6 billion AWS agreement tied to enterprise AI adoption. Salesforce also reported $11.1 billion in quarterly revenue and highlighted Agentforce and data growth. Software is not dead. Investors are separating platforms with momentum from names facing a reset. Oil helped the day, but it was not the spine. Brent fell 4.6% to $92.25, and U.S. crude fell 5.5% to $88.68 as traders hoped the U.S. and Iran could move toward reopening the Strait of Hormuz. Lower oil gives households and businesses breathing room. The new market question is automatic equity demand. The watch list is mechanical. Watch the final SpaceX price, the public float, and the first week of trading. Watch for official NASDAQ and FTSE Russell nemises. Watch which existing index names get trimmed when the new entrant needs room. And watch the software split, Zscaler-type resets versus Snowflake-type momentum. The takeaway is straightforward. May 27 gave investors record indexes, lower oil, and a new market structure question. If index rules pull giant IPOs into benchmarks faster, passive flow becomes part of the story from day one. That can support a debut, but it can also create volatility and pressure existing leaders. Flow is powerful. It is not a moat.